Hi, it's Steve and Joe from Freshagenda. And Steve, this time around, we were in Amsterdam last time.
In a hotel room that was very tiny.
Very early in the morning.
Yeah.
This time it's pre-dinner. We're in our lovely, very Nonna-influenced flat here in beautiful Lucca. So not complaining.
We've never done a video from here.
And we have never done a video from here, and we're doing this before dinner, so let's get on with it.
So keeping it simple this week, we're just going to talk about a very interesting GDT result and some chart of the week.
Of course.
Gems. So, look, an event that had a lot of news in the detail, I suppose. Overall, it looked, 3% fall, nearly that in the index, which is a strange number. That seemed to be heavily impacted by, we saw falls in fats, particularly the back end of AMF and all across butter. But the heavy drop in WMP, whole milk powder instantized product.
Yes.
We saw nearly a $2,000 drop in the C2 of that. There was more volume of that put up. So that's weighed on the overall average. As you can see there, whole milk powder regular actually lifted on better demand, which we'll come to. So it's steadied, and it's interesting where that was bought and where it's going to be shipped to. Just in the background, the market's been going pretty flat.
Yeah, it's a lot
sideways.
There's a lot of uncertainty, and people we've talked to in the last couple of weeks over here, we're all kind of watching and wondering what's happening in China.
Yeah.
That's the big unknown. But still, we've got fairly tight supplies in Europe, so
the fundamentals prevail.
Yeah.
And I think there's starting to be some, light at the end of the tunnel in the restrictions in China, but it will be a slow recovery.
Sure.
In retail demand. Overall demand was patchy, so whole milk powder was stronger for the volume put up. Skim steady on average, and the two fats were slightly weaker. Butter was quite a bit weaker, especially than average.
So the shapes of those curves are interesting, Steve. There's, especially for whole milk powder, quite sustained demand for a few rounds there.
That's overall whole milk powder. So that's got a couple of different stories in it, I guess. That's the difficulty. But skim milk powder a little weaker than the previous event, where there was a heavier fall. So it's interesting detail. This is probably the most, in the detail, this is the most significant fact that the instantized product prices crashed, particularly C1 and C2, and very heavy falls from the previous trades. Smaller falls further out, and look at the price curve. It goes right up, just looking at the black bars there. So we've got quite a steep expectation of future values, and still $1,000 between the C2 and the C5.
Sure.
Going out. But that C2 has brought the differential to regular product back to what I call normal, what it used to be before this big rally.
Yep.
The result...
We like looking at this, don't we?
Yeah, I do, yeah. It actually brought the difference back a little bit this time around. So that's an interesting outcome in the detail. Doesn't really change things. Everyone's talking about China in the lead up, and the participation in whole milk powder was lower.
Yep.
But demand was met by other regions coming in. So essentially, the overall demand was stronger. We had more buying from Middle East and South America, which helped this result, no doubt. Yeah,
and we often see that, don't we? When prices ease off a bit, those buyers from those regions tend to get in there and make some purchases. Yeah. So next event will be interesting to see if it remains this broad-based.
Yeah. And with skim milk powder, that was probably a pretty strong takeaway. They bought a little more than last time, despite the gloom about what the fall in retail demand and fall in food service is doing to the demand for ingredients in the short term, at least.
Sure.
So on that, chart of the week, Joe, what did you dig out this time?
Yeah, this time around, I thought we'd have a look at US domestic commercial disappearance, as the name suggests, which came out in the last few days. We have had a bit of a change in methodology that's meant these numbers have moved around. The overall picture, I guess, is still quite positive.
Fairly steady there.
Yeah, in terms of in terms of cheese demand especially, which is fairly important. But butter still soft. But we thought we'd just have a look back at the comparisons of the revisions, because we're data nerds, we do things like that.
Yeah, this is pretty dull stuff really. But so the methodology has changed. I'm sure there's plenty of reasons why they did that and what it means. But when you look at the changes over time, cheese demand in the new numbers is a bit better than was previously thought.
Mm-hmm.
So that goes back a couple of years. But so recently cheese demand's been stronger, except that last little tail off. When you look at non-fat and skim overall, it's been a little better apart from recently. It's diverted. But butter's been worse. The market will digest that as it usually does, sees fit. Either disbelieves it, pays no attention, but it is interesting to that assessment is different.
And different for each product group.
Yeah.
So go figure.
Who knows? Right.
Anyway, we got through that without a whole lot of dogs barking and neighbours yelling, which has been going on all afternoon. So maybe we should end it there, Steve.
I think we should pull out while the going is good.
That's right.
We'll see you back soon.